We'll start with oil. Is Saudi Arabia listening to President Trump?
Well, President Trump, well, first of all, thank you for having me. So President Trump wants substantially lower prices. Yes, some of the senior officials in the incoming administrations are talking about $50 oil. So President Trump wants significantly higher production in the U.S. and OPEC immediately today. At the same time, there's a dichotomy within the Trump administration because on one side, they want $50 oil. On the other side, they're talking about bringing back maximum pressure campaign on countries like Iran, Venezuela. They're also talking about enforcing, harsher enforcement of sanctions on Russia. So what that means, at the moment when we look at the numbers, especially with the latest round of sanctions, the numbers are becoming very, very large. And just to give you a couple of examples. So today, 20% of all the Aframaxes, those are the big boats that are moving oil volumes, today they're under sanctions. 20%, by our estimate, about 20% of the global oil today is traded under sanctions, and it's traded most likely outside of the US dollar. So that's where we come back to the remarks from Scott Besson during his hearing, is that he said the sanctions are not a good policy. We should be looking at the tariffs because it pushes trade outside of the US dollar, and we're actually observing that in the commodity space. So in terms of the oil, what are the numbers? So about 1.5 million barrels per day of oil, Russian oil, is under threat, yes, if indeed they're going ahead with the harsher sanctions. In the case of Iran, the market is pricing in right now anywhere lost between 700,000 barrels of oil per day to 1.3 million barrels per day. On top of that, you have some volumes, about 200,000 barrels per day of oil of losses in Venezuela potentially. So the numbers are really, really large. So the question is, who is going to backfill that? Yes, because if this is not going to happen, if there's nobody to backfill, then the balance is tightened, the price goes up, and that's exactly the opposite of what Trump is trying to achieve, substantially lower energy prices.
Well, that's what I'm curious about, too, because he does talk about trying to, I guess, boost production here. I mean, in his speech earlier at Davos, he talked about all this liquid gold beneath our feet. Is there all this liquid gold beneath our feet? I thought we've kind of tapped everything that was beneath our feet already.
Strongly disagree. So in the case of the United States, we're #1 in coal reserves. We're #1 in gas reserves. We're #3 in oil reserves. So indeed, we have a significant amount of natural resources on the ground. We're actually short on metals, but it's a completely different conversation. So what is the plan? On day one, he announced, or he declared national energy emergency. He lifted all the restrictions on drilling, transportation, and refining on oil. He wants to increase production by energy, he means oil, gas, and electricity. So it's over-encompassing. He wants to increase production very, very quickly. But at the same time, the United States is not just in-time production. Yes, all of that takes time. All of that, it's not 2025 type of a production.
So assume hypothetically that we do find a way to increase production in some meaningful way. What would the response be by OPEC and, more importantly, by Saudi Arabia?
So I think the question is, #1, how fast the production can increase, to what volumes are we talking about? So I think the question to ask here is, what is the equilibrium price at which level the U.S. producer feels comfortable responding? Because at the same time, they don't want to drill themselves out of business. Yeah, the drill, baby, drill, all of them keep talking about dividends, buybacks, return on investment, and all those things. So we estimate that $60 price, at this level, U.S. production is flat. At $50 price, U.S. production is definitely declining. So what we believe is that what they're going to try to achieve is they're going to bring this equilibrium price lower through deregulation. Another example, 20% of the U.S. oil and gas today is produced on federal lands, and producers pay between 12 to 20% royalty. This will go down to zero. Corporate taxes, that's paid on profit. It's about 25% at the moment. That could go down to 15. Methane emissions, all other things that are being taxed at the moment, all of that will go down to zero. So they will bring this equilibrium price down from 60 to whatever number we have at the moment. We're calculating. We can come back and discuss that next time. But that's what we believe what they're trying to achieve. So your question is correct. What are the volumes? What OPEC's response will be? So far, we've seen no indications from the OPEC that they are willing to backstop any sanctions on Iran, Venezuela, or Russia.
So what do you think is going to matter more then? Is it going to be more oil coming from the U.S., assuming that we can lower that break-even price through those measures, or the geopolitical risks?
So the U.S. oil it takes time. So even with all the deregulation, it's not a 2025 story, it's 2026 and beyond. Not only that, they're very explicit that this is within the next presidential term. Yes, it's between now and the end of 2028, and this will happen. They're working towards that. Geopolitical risks are very high, and some of that is priced in, some of that is not priced in. What we estimate today is the fair value of oil today, Brent, is $75. Today, we're trading at 78, 79, so we're trading above that. This is what is priced in at the moment. We believe actually it's the sanctions on Iran, potentially that the market is pricing in at the moment. The rest is not there yet.
If the rest comes from Venezuela and Russia, what does the price look like?
So the rule of thumb for this year is 1 million barrels per day equals $9. So that's how we should be thinking about that.
As in that comes off the market, you add $9 to the fair value.
Correct.
Okay, so that could be material.
It's material, especially for a president who campaigned on bringing prices for the U.S. consumers significantly lower.
Yeah.
He promised to halve the prices of energy in the next 12 months. So the argument we're making is that because of that, they are not going to go ahead with the sanctions. They will try to negotiate. They will be used as a leverage, negotiating leverage with Russia, with Iran, maybe Venezuela. But the argument we're making is the lower price is significantly more important than everything else.